A mortgage is a loan that allows people to buy a house up front. A subprime mortgage is normally issued to borrowers with low credit ratings. And historically, many banks wouldn't even make loans to people with bad credit. In the early 2000s, however, the housing market was booming, so banks began giving subprime mortgages to people even if they had low credit ratings. In other words, lenders, often banks, were loaning money to people who were less likely to be able to pay them back and charging them more money for those mortgage loans through high interest rates. Many people took on these subprime mortgages because they stood to make a large profit if their house increased in value. And that seemed like a pretty good bet. Houses had been increasing in value over the past several years. In 2007, the housing bubble burst. As demand went down, the prices of homes dropped rapidly. Many people were no longer able to pay off their mortgages or sell their houses, and the banks foreclosed their homes. Since the foreclosed houses were now worth less money, financial institutions lost money too, along with the homeowners. As a result, the housing market failed, banks collapsed, the economy plummeted, and the Great Recession had officially begun.
If you are watching us from the last home you'll ever own tonight, consider yourself lucky. Same goes for anyone ready to buy a slice of the American dream. But if you're among the millions trying to sell, this was a very bad day. The National Association of Realtors reported the worst month-to-month drop in existing home sales since they started keeping track in the late 90s. And compared to last year, closings are down more than 25%. So if there is a sign in your yard tonight, is there anything you can do beyond hoping and waiting?
It's just pure disgust with the politicians.
Stunned traders called it a political move that could further cripple the nation's economy.
When the White House and the administration described a problem, we worked in a bipartisan way to have a legislation that would help stabilize the markets.
It wasn't the right time to get up in a soapbox and display political muscle. I think that people were taken aback by that, and then I think the vote reflected that.
Wary investors now wonder how the markets will recover from billions of dollars of bad mortgage debts, frozen credit markets, banks afraid to lend. Although the bailout bill failed to pass, analysts say it's not completely over.
Well, I think what it means is that some of those markets might continue to be frozen. We'll need additional assistance in order to thaw out, and I think that all eyes will continue to be on Washington.
Investor confidence has just shattered after this devastating day on Wall Street. Although investors know there will be some type of bailout plan, there's just too big of a question mark on when that will be and what the details will be. And they're worried that markets will continue to suffer until it's all resolved.
0.7% here, a loss of 37 points or so. Apple shares are just getting hammered this morning.
We're down by between 3 and 4.5% generally across these markets. Let's talk about the speed with which we are watching this market deteriorate. We're red everywhere, essentially, down by 4-5%.
We're down over 16%. Dow at the same time has fallen about 18%.
The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
Two-year no yields went from 190 to 166 in the blink of an eye.
On the NASDAQ, everything and more has been completely wiped out.
It was the worst day on Wall Street since the crash of 1987.
From the financial capital of the world, the opening bell is going to ring in 5 seconds, and to be honest with you, we wish it wouldn't.
Traders here working the phone say a lot of their customers are freaked out, waiting to see how low the Dow will go. They're focused on the Dow, not so focused on OPEC. Yes, OPEC did cut production by 1.5 million barrels per day.
Really, you're seeing just broad-based declines across all of the major technology sectors. Apple's under pressure, Yahoo down 8.5%, Cisco 6.5%, Research in Motion 10%.
And we're not getting the bid wanted. We're not getting the stop trading, and we see where the buyers are. We're just, every day they're pounding it.
The heightened financial turmoil that we have experienced of late may well lengthen the period of weak economic performance
and further increase the risk to growth.
Can't look at it after you buy it. It's so horrible.
But we've had an 8-day losing streak in the Dow that in percentage terms puts it on par, close to the loss suffered in that crash in 1987, close to that percentage loss those 2 days in 1929.
This is an extraordinary period for America's economy. Over the past few weeks, many Americans have felt anxiety about their finances and their future. I understand their worry and their frustration. We've seen triple-digit swings in the stock market. Major financial institutions have teetered on the edge of collapse, and some have failed. As uncertainty has grown, many banks have restricted lending. Credit markets have frozen, and families and businesses have found it harder to borrow money. We are in the midst of a serious financial crisis, and the federal government is responding with decisive action. We boosted confidence in money market mutual funds and acted to prevent major investors from intentionally driving down stocks for their own personal gain. Most importantly, my administration is working with Congress to address the root cause behind much of the instability in our markets.
What started in America last year has now spread to every part of the world.
We're down 9% today. The Xetra DAX over in Frankfurt is down by 9%. The Paris market down by 9%. Austria, which was briefly suspended earlier on in the day, is down by nearly 11%.
Our system of free enterprise rests on the conviction that the federal government should interfere in the marketplace only when necessary. Given the precarious state of today's financial markets and their vital importance to the daily lives of the American people, government intervention is not only warranted, it is essential. In recent weeks, the federal government has taken a series of measures to help promote stability in the overall economy. To avoid severe disruptions in the financial markets and to support home financing, we took action to address the situation at Fannie Mae and Freddie Mac. The Federal Reserve also acted to prevent the disorderly liquidation of the insurance company AIG. And in coordination with central banks around the world, the Fed has injected much-needed liquidity into our financial system. These were targeted measures designed primarily to stop the problems of individual firms from spreading even more broadly. But more action is needed. It is essential that the package be robust and strong to address the problem. I know, look, I'm sure there's some of my friends out there saying, I thought this guy was a market guy. You know, what happened to him? Well, my first instinct wasn't to, lay out a huge government plan. My first instinct was to let the market work until I realized that upon being briefed by the experts of how significant this problem became. And so I decided to act, and act boldly. It turns out that there's a lot of interlinks throughout the financial system. The system had grown to a point where a lot of people were dependent upon each other. And that the collapse of one part of the system wouldn't just affect a part of the financial markets, it would affect the average citizen. And how? Well, it'd affect their capacity to borrow money, to buy a house, or to finance a college loan. It'd affect the ability of a small business to get credit. In other words, the systemic risk was significant, and it required a significant response, and Congress understands that, and we'll work to get something done as quickly and as big as possible. There's going to be billions, hundreds of billions of dollars at risk. And this is a big package because it was a big problem. And I will tell our citizens and continue to remind them that the risk of doing nothing far outweighs the risk of the package.
Speak briefly about the state of our economy and why I believe we need to put this recovery plan in motion as soon as possible. I took a trip to Elkhart, Indiana today. Elkhart's a place that has lost jobs faster than anywhere else in America. In 1 year, the unemployment rate went from 4.7% to 15.3%. Companies that have sustained this community for years are shedding jobs at an alarming speed. And the people who've lost them have no idea what to do or who to turn to. They can't pay their bills, and they've stopped spending money. And because they've stopped spending money, more businesses have been forced to lay off more workers. In fact, local TV stations have started running public service announcements that tell people where to find food banks, even as the food banks don't have enough to meet the demand. As we speak, similar scenes are playing out in cities and towns across America. Last Monday, more than 1,000 men and women stood in line for 35 firefighter jobs in Miami. Last month, our economy lost 598,000 jobs, which is nearly the equivalent of losing every single job in the state of Maine. And if there's anyone out there who still doesn't believe this constitutes a full-blown crisis, I suggest speaking to one of the millions of Americans whose lives have been turned upside down because they don't know where their next paycheck is coming from. And that is why the single most important part of this economic recovery and reinvestment plan is the fact that it will save or create up to 4 million jobs, because that's what America needs most right now.
It was a bum deal for people. You got folks out there, teachers and construction workers and small business people, single moms, and they're working hard. They're acting responsibly. To the extent that they were involved in any of this, it's that some mortgage broker tells them they can afford a house that they don't know. It looks like they can afford it. And suddenly, folks are getting wiped out.
Hi, how are you? Good, what's your name?
And the problem you had, the dynamic you had at that juncture, is that the actions that are necessary to save the financial system are, by any definition, bad politics.